Hello traders and Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. And today we're starting off overseas. We're actually starting off in Hong Kong. You've seen all the unrest they have there with the students rioting and demonstrating in the financial district. Well, I thought it'd be kind of interesting to look at an ETF that actually tracks the index very closely. That's the ETF EWH is the symbol. It's right up here, and it's iShares. And it's the Hong Kong index. Well, I looked at the index and I said, okay, let's see what our triangles say. So I put in our weekly trade triangles, and they said actually to exit this at 2181. That was on the 12th of September. Now today we had a signal that the actual index has totally reversed and is now in a downtrend. You can see with a minus 100, that's a very strong downtrend for this index. That's not to say it won't bounce from here, but it certainly is. The trend is sort of set for the moment, at least for quite some time. Now moving on to this side of the world, and we're looking at the Dow, and you can see we had a weekly today, which is the first weekly we've seen in quite some time. That's on the 29th. It happened at 16,937. Now the market's a little bit higher than that right now, I understand, but again, indicating a sideline position. We're right flat on the RSI, you can see right here, and that should lend some support. So I think we're more in a trading range as opposed to a sharp downtrend like the Hong Kong index. On the S&P 500, much the same, minus 60, a trading range, but the difference here is the fact that we're below the 50 line, indicating more weakness in this index than the Dow. Same picture for the S&P 500. The trend is down. Same picture for the NASDAQ. The trend, the weekly trend, is down, indicating a sidelines position and a trading range. You see we're also below the 50 line on the RSI, indicating further weakness. So let's move on. Let's go to some of the other markets that we're tracking. And we haven't spoken about gold for a while, but you can see gold, the trend is clearly down. You can see a weekly came in right here. So everything from here all the way down should have been on a short trade. You should either be out of the market or trading from the short side. You see our last signal here was $1,210. That's clearly going to be taken out very soon with the way the market's rallying right now, but nonetheless the trend continues to be negative. The only positive, potential positive here is the fact you may be seeing a divergence on the RSI indicator. So let's watch that very closely. Somewhere along the line here, gold is going to reverse, but it's not here yet. So don't try to jump the gun and guess where it's going to happen. Just go with the trade triangles because they've been very, very successful in this market. Pretty much the same picture in silver, which is really depressed. You can see the weekly came in here and it has just gone down, 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 and there is no signs of a turn there. Minus 90 indicating a strong downtrend, and I think that's likely to continue until it at least finds some sort of support. If we scope this out to the max, you can see that we're getting down to areas where it's found support right around this 19 area, 18 area, 15, 17 area. So right around here, if we just draw like a line from this midpoint and just say around there, we should find some support. So let's see how that plays out. Our next market is the dollar index, which has been from a very choppy period right here to really a super period from 80.40 to where we are now, 85.52. That's a huge move in dollar terms, in terms of percentages for Forex. Plus 90, a strong, strong uptrend. But you know, things do reverse and they do change, and you have to be ready for them. And that's why the trade triangles really give you the edge. A little bit of a different picture in crude oil. Actually, crude oil gave a signal, a buy signal at 94.12. It's currently trading at 94.21. So you should be long this market. We've just went over the 50 line, indicating this is a reversal to the upside. You've almost got a pivot point right here. You can see that. And if we close over this area, then you have an opportunity to see this market do, I think, to go probably to the 97, maybe even the 98 level. So pay close attention to that market right now. Now this is Bitcoin. We haven't talked about Bitcoin for a while, and quite honestly, it's been a little bit dismal. We had a weekly signal to just exit the market at 590. It's currently 382. So again, very oversold. A lot of disappointed bulls here in this market. And if we scope this out, you can see it's taken out the lows that would take right here back in the April period. and it's really looking not good at all. Could it go all the way back down to 100? Yes, it could. Could it go all the way back to 10? Who knows what it's worth right now? But right now, nobody seems to want to own Bitcoin. Hey, this is Adam Hewison from Market Club. We're going to conclude with Bitcoin, and be sure to check us out on the web. And if you want to leave a comment on this video, please do so below or on our Q&A section. We'll be happy to answer any questions you may have. Have a great trading day, everyone.
You can find Adam Hewison as a regular contributor on Bloomberg, Business News Network, CNBC, and Fox Business News.